Good morning, everyone. This is Rahul Jain. Our today's topic is Accounting Standard 14, that is accounting for amalgamation. Before moving ahead, I would like to throw light upon accounting standards. Why we read accounting standard, why there is a necessity of accounting standard, what is an objective. So, accounting standard are standards which throw lights upon the procedures, the policies, the principles of accounting which needs to be followed for a particular financial transaction. Okay, so the accounting standard actually gives us the direction, clarity about what needs to be followed in which financial transactions. And amalgamation is one of the financial transaction only. So we are going to read more about the accounting for amalgamation. Okay, so our today's topic's agenda is basically meaning and scope of amalgamation. Then there is types of amalgamation under AS14, how to account for amalgamation transactions, goodwill that arises on amalgamation, or reserves if any, how to treat that, disclosure requirements in the notes of financial statements, and what needs to be disclosed if amalgamation takes place after the balance sheet date. Okay, so let us understand the meaning or scope of amalgamation. Amalgamation word came from amalgam, okay, which means to unite or coming together as one. So, if we have to consider human life here, marriage is what? That is an amalgamation. दो आत्मा एक जान बन जाती है कब शादी के बाद. That is amalgamation. But I would like to tell that we are not going to read here amalgamation of human being in the form of marriage here. Our focus would be on accounting for amalgamations for companies. Okay, so amalgamation definition as such is not there in Companies Act 1956 or Companies Act 2013, I would say, but what AS14 tells is an amalgamation pursuant to the provisions of the Companies Act or any other statute which may be applicable to companies. That is what is amalgamation. There is no definition as such by Companies Act. Now, what is the scope of amalgamation? And what is the scope of accounting standards in terms of amalgamation? So, this accounting standard 14 deals with accounting for amalgamation plus the treatment of any resultant goodwill or reserves, right? So, in scope would be two companies merged together and new entities formed, that is amalgamation. One company merged into another, that is also amalgamation. But out of scope activity here is basically if one company is acquired by another, but that acquired entity continues to exist even after that acquisition, that would not be covered here basically. So, for example, let us understand with the help of examples. Idea and Vodafone. There is a recent news, okay, that they would be merged as one entity. Either of one would go, or both of them would go, and the new entity would be formed. So that is what is amalgamation. ASL merged into Reliance Communication. So ASL would basically go out, and Reliance Communication would come in. Okay, so that is also in the scope of amalgamation. AS14, as per AS14. Now, what is out of scope in terms of AS14 is acquisition of any entity by other, but the other entity continues to exist even after that. So that is out of scope basically, that we are not going to read here. Now, by above examples, what do you feel? Why amalgamation happens actually? Why there is a need of amalgamation? Is there any need? What do you feel? So in the recent example, if we look at, one of the reason is basically eliminating competition. Then synergy benefits, that is bringing economies in the scale of operations, increasing shareholders' value, to reduce the degree of risk by diversification, managerial effectiveness, to achieve more growth and gain financially. So that these are few of the reasons because of which amalgamation happens. Now let us move forward. The example, if we see in the first case, A Limited is acquired by B Limited. Now there are two words which have been used: acquired, acquirer. Acquirer is the company which would acquire the other company. So in this case, B Limited is acquirer and A Limited is acquired by B Limited. And the new company is B Limited, which would form, and A Limited basically would go out. Okay, so that is covered under AS14. Let us move forward with the second example here. A and B Limited is acquired by a C Limited in the second example. That is, for example, Idea and Vodafone merged together and a completely new entity is formed. For example, Idea Voda or Voda Idea or Idea Phone, whatever names by which it can be called. That would be decided by them actually. So Idea is gone, Vodafone is gone, and completely new entity came into picture. Third thing, A Limited is acquired by B Limited, but both A and B Limited continue to exist even after that acquisition. That is not covered under AS14. That is not the part of AS14 actually, because both companies are still running their businesses. Only thing is that shareholding is acquired by one of the company. Okay, so that is out of scope in from amalgamation. Now amalgamation, if I have to tell, it's one of the way of business restructuring. Okay, now there are different ways of business restructuring, I would say. Amalgamation, where the two company merges with each other, or two companies or more companies come together and form another company. So now that is one of the mode of business restructuring. Then there is a demerger. That is also a kind of business restructuring. Slump sale, itemized sale. Those are also business restructuring. Now, different accounting standards or different accounting treatments are applied to different kind of business restructuring. Okay, in amalgamation, AS14 is applied. In demerger, we need to follow general accounting principles and standards. There is no specific standard as such given by the ICI. In case of slump sale, you know about slump sale? In slump sale, what happens is basically a business. For example, Reliance Industries, they have got a lot of businesses. And one of the businesses sold to another company for a lump sum consideration. That is a slump sale. Here, what accounting standard would apply? It's AS10 basically. That would be applicable. Similarly, in itemized sale, where the some of the assets of the company are sold to another company for some consideration. So that is also a part of AS10 or AS26 if the asset is intangible asset. If it is fixed asset, then it is AS10 basically. So that is itemized sale where few of the assets, fixed assets, are sold to another company. That's why the name itself is suggesting that itemized sale. Okay, let us move forward. So in short, accounting standard 14 applies principally to companies amalgamation and doesn't apply to acquisitions where the acquired entity continues to exist, like share purchase or asset purchase. Okay, now let us move to our next topic, types of amalgamation. Now AS14 tells that amalgamation are of two types: amalgamation in the nature of merger, amalgamation in the nature of purchase. And different accounting standards are followed in different types of amalgamation. Now, the number one is nature of merger. Now, pooling interest method would be followed in terms of accounting for such kind of amalgamation. And the purchase method would be followed for accounting of amalgamation in the nature of purchase. So we don't need to give more brainstorming over here in terms of learning this because purchase method in the nature of purchase, pooling interest method, merger. Now let us read about amalgamation in the nature of mergers. Now when the transaction of amalgamation would be considered in the nature of merger. Now there are 5 conditions that needs to be fulfilled for amalgamation to be classified as amalgamation in the nature of merger. Okay, so those 5 conditions are: number one, all assets and liabilities of transferor company are taken over by the transferee company. All assets and liabilities. Second is shareholders holding not less than 90% of the face value of equity shares of transferor companies become equity shareholders of the transferee company. So first part is basically क्या है, जो भी एसेट्स और लाइबिलिटीज है ट्रांसफर कंपनीज के वो एक्वायर कौन करने वाला है, ट्रांसफरी कंपनी. सेकेंड थिंग, 90% शेयर होल्डिंग जिन शेयर होल्डर्स के पास है वो शेयर होल्डर बन जाते हैं ट्रांसफरी कंपनी के. ओके, now third part is basically consideration. Consideration should be in the form of equity shares, except that cash may be paid for fractional shares. Okay, there would be examples on this, so don't worry in terms of understanding the concept. You would understand more logically when the examples would come into picture. The fourth point is the business of the transferor is intended to be carried on or after amalgamation.